Hi everyone, I'm Joseph Tan. Welcome back to Basic Business Finance. Today's topic is Structure of Financial Statement, Lecture 1, Part 3. The objective of this section is that you are able to identify the basic elements in the accounting equation. Today's lecture outline will touch on the structure of the financial statements. Income statements, the first one is income statements, also known as profit and loss statements. Next, we'll look at balance sheet. Income statements and balance sheet. These are the two most commonly used financial statements out there. Used by investors, potential investors, bankers, businessmen, etc. The income statements provides information about a firm's operating results during a specific period. Usually, the specific period is 1 year. So basically, it means that for the past 1 year, you know that whether the company is doing good or bad. Usually, this is measured in terms of profit. So the basic elements in these income statements are revenues and expenses. Let's look at one example. Company XYZ. The sales revenue is 170,000 and expenses are 100,000. So to find profit, we simply take revenue minus expenses. So 170,000 minus 100,000 give you 70,000 profit. Let's look at the other financial statements. Balance sheet. Balance sheet presents information of the firm's financial position at a particular time. Take note, this is different from income statement. Income statement for 1 year. For balance sheet, is on this particular day. For example, on this day, 1st January, how much balance, they only tell you the financial position of the company on this one day. It shows the detail of assets, liabilities, and owner's equity. The balance sheet must balance. It can be expressed in an accounting equation as this. The asset must always equals to owner's equity plus liabilities. Let's look at one of the elements, assets. Assets are economical resources a business owns. Basically, it's owned by the business. That's aimed to bring future economical benefits to the business. Let's look at some examples here of assets. Cash. Cash at bank is an asset. Furniture. Inventories. Car. And account receivables. Next, we look at owner's equity. It is a claim of an owner of a business to the net assets of the business. It is also called shareholders' equity. The example is share capital. Liabilities. They are economical obligations, short debts, payable by a business to outside parties. Basically, the business owe money to outside party. Examples: accounts payable and loan from bank. Let's go back to the accounting equation. We know there are three basic elements in this equation. A is assets, L liabilities, OE is owner's equity. For the accounting equation, we know that A equals to L plus OE, or you can move it around and OE equals to A minus L, or L equals to A minus OE. Whatever, in all circumstances, the balance sheet must balance at all time. Please be very familiar with this accounting equation because you're going to use it very often. We know that A equals to L plus OE. To find OE, I simply move it around. Equals to A, OE equals to A minus L. Let's look at one example here. The asset is 50K, liabilities 30. Let's find OE. We know that OE equals to A minus L. So 50K minus 30K gives us 20K. So we know that the OE is valued at 20K, 20,000. We have come to the end of this section. Thank you for listening to me. Bye bye.